Let's invite Gaurav Kapur, the Senior Vice President and Chief Economist at IndusInd Bank here. Hi Gaurav, thanks so much for joining us here on Markets at Noon. First up, what are you penciling in? What is it that your expectation is that is going to be announced?
Our expectation is that the headline GDP growth will be around 6.6%. This is a quarter where there's a base effect drag which is at play. I think if I look at the data from the spending side, we've seen enough signs that private consumption growth would again see a quarter of tepid growth. There's enough high frequency data which corroborates that point, which was pointed out even by the MPC. Then on the investment side also on the investment side actually we've seen 4 quarters of fairly strong growth. So remains to be seen whether that momentum can be sustained. But going by the guidance which from the MPC minutes and from some of the from the anecdotal evidence, it appears compared to Q3 growth would have slowed down. But on the in terms of drag caused by the net, by the kind of trade deficit or the current account deficit, I think that has certainly reduced between Q2 and Q3, which would be positive, and I think that may provide some kind of an upside to the number I'm talking about. And from the sectoral perspective, I think manufacturing sector, barring the month of October, I think November and December months were relatively patchy. Even the Q3 results showed that the impact of increase in costs, especially fuel costs, was visible in this particular quarter. There was liquidity tightness as well, so that all that could have affected, I would think, would have acted to slow down growth or rather maintain growth at level what we've seen in the last couple of quarters. So no real acceleration, though the PMI numbers both from manufacturing and services continue to show a fairly benign pace of improvement between Q2 and Q3, which would again largely be in line with about 6.4% growth, which I am penciling in for the manufacturing sector. On the services sector, of course, a large part of the activity growth has been driven by government spending, which in Q3 central government spending contracted, but the state governments picked up the slack, so not too much of a change there. So the overall narrative or the overall trend we've seen in the numbers in the last couple of quarters is unlikely to change significantly. So I think what matters now is that how much of a surprise do we see on either side, because that would have an impact on especially on the upcoming monetary policy. Because considering especially the fact that the global environment, global economic growth environment continues to show activity slowing down in the large economies, especially China, where the latest manufacturing PMI has come below 50, showing signs of contraction, maybe on account of the festival season, but essentially in line with in line with the concerns the Chinese policymakers have shown by providing fiscal stimulus to support growth. So on the whole, I think to reiterate, I'm expecting growth at about 6.6 odd percent, headline GVA growth of about 6.4%, and consumption growth
6% for the quarter
to really remain tepid. Private investment activity growth to slow somewhat. Yeah.
Okay, so 6.6% for the quarter. What about for the full year? What are you penciling in for that?
No, I'm talking of the quarter. For the full year, I think I'm going with 7.2% at this point in time.
Gaurav, I just wanted to understand that, okay, that's the number that you're looking at. But when we talk about the broader markets or broader things, there are two things which, will mind. What happens in terms of the border tension that's going on. Of course, you cannot have a view on that. But how much of a tariff war are you predicting it for the global economy to slow down? How things progress over there? What the markets are factoring is? Can you talk to us about that?
I think on that front, markets are clearly worried. There has been in the run-up to the meeting, I think in the run-up to these numbers, in fact, in the run-up to the last MPC, I think the concerns and the fact that the global trade growth itself in 2018 has slowed down. So there are concerns that the tariff war, which actually started in 2018, but the impact of the tariffs of US on China only become more punitive in 2019, with not only tariffs on China, but the US is also considering putting tariffs on all car imports from rest of the world, which would really be an escalation of the trade war and which would increase the pain on a global front. So for us, from the perspective of exports, I think we will of course be adversely affected. Our exports are clearly more, while we are not really a part of any major global supply chain in that sense, but our exports are essentially driven to a large extent by global growth. So we will of course face the second round impact. We may not be that directly be affected, let's say, by the tariff issues or tariff war if it escalates, but the fact that it will lead to a slowdown in some of our trading partners, large trading partners, would then have an impact on our exports, which I think is visible in the trade data to some extent, which is a concern which policymakers have shared, which the MPC clearly is worried about. Because the MPC minutes essentially suggest that most of the MPC members were more worried about at this juncture were more worried about the global growth slowdown and its spillover impact onto India. So exports is one route. The other route, of course, is the pace of capital flows, which has been quite patchy since February last year, slows down. I mean, we've seen relatively healthy FDI flows till November, December for the time the data is available. But beyond that, I think you're running into elections soon, then this cross-border tension, and then the overall the overall assessment of growth slowing down globally, and investors really pulling out capital from essentially emerging markets, despite the fact that the Fed has kind of taken a step back. All of that these are complex interplay of things. These are the things which the markets are looking at. In case of India, I think it kind of manifests itself in the flow of capital into our equity markets, as well as in the form of FDI flows.
Right, Gaurav. Thanks so much for taking out time for us. Always good to get perspective from you.